Hey gang, Mandy here at FX Link. Thank you for joining us on this week's Sunday's market preparation video. Well, this week we are going to look at the Aussie pair. Possible long position and a short position at the same time. Well, for the long term, I think I'll still be bearish since I have quite significant price levels which are broken right here, right over 7500s, which is another psychological level that we looked at the past week. We simply got a trend continuation trade right here, took our profits over to these levels of structure right at 74.69 and looked at what would happen during the week. Well, what the market tends to do is the market moves in a directional manner which is trending for 30% of the time in the market, and the other 70% of the time the market is just moving sideways. Look at it as a game of tag of war where people on each side pull the rope and try to pull the rope into their direction. This is what happens in the market. Whenever the market tends to move directional, the bulls will try to take over and pull the market into their direction, same as the tug of war game. This is a classic case of a bullish rotation, right? The market has been trending for quite a while now, right? Starting from the beginning of this year, the market has been trending, and as the market has been trending, it has been moving in ebbs and flows. So as we look more closer, we have broken these levels of structure, which gives me a bearish mindset for now, right? In this case of a bullish rotation, we tend to see a 3 drives pattern, which is a high close followed up with an extension, then a retracement back, and a high close, which we get right now. Okay, the market made a lower close, retracement, lower close, then we get a retest at that retracement. Now we get a high close, which is an extension. Okay, and on our RSI, you tend to see bullish divergence, which is another sign of the bulls trying to take over this market. Okay, as a trend continuation trader, as I go to my lower time frame, what you would want to do, you might want to grab a opportunity for a trend continuation in anticipation of an extension back to these levels of structure, which is at our support levels at 76.50s. Okay, typically what I tend to look for is deep retracements for catching the next move, so that I could minimize my risk and maximize my reward. In this case, if price does come to these levels of structure, you might want to look for a trend continuation trading opportunity, going for a long opportunity in anticipation of a retest at these levels of structure. Or if you wish, or if you are a true trend continuation trader, you might be shooting for next targets of an extension right over to 76 cents 50s. So what confluence do we have for this trend continuation trade? Well, we might take our Fibonacci retracement from this swing low back to the swing high, and you see we have our 50% retracement. And if I put my Fibonacci retracement 2 back again from this impulse leg back to the swing high again, you would notice we have a confluence of a 618 and a 50% retracement. So let me take all the other retracements out so we could clearly see what I'm talking about. Okay, 618, let's take you out, and you out. Okay, so 50% retracement, 618 retracement, lining up exactly where we have our major structure level on the daily time frame. So you might be looking for a position that looks something like this. Okay, stops, you might suck them down over to these levels of structure. depending on the ATR at that time. So you might put stops probably to these levels of structure, not to waste more, then targets over to these levels of structure. So you might be looking for, you might be shooting for a 90 pip reward on this one. Okay, so another trading opportunity that I'm closely looking at and that I prefer to take on this one, which is a bearish trading opportunity. Well, I'm gonna get a confluence over to these levels of structure, which is at 76.50s. I'm gonna get a ABCD pattern as I take my 2 from this impulse leg, and as I copy and paste that, okay, copy and paste that, bring it back, you would see our ABCD pattern terminates over where we had a demand of price. Okay, so this, do you see this big red candle right here? Yes, look at how price reacted in the past over to those levels of structure. Sellers came in furiously and the buyers didn't come in, just like a tug of war game. Buyers didn't pull the game into their side as much as it did right here. Okay, you see this deep pullback? We didn't have a deep pullback in this one, in this case, which shows us some sign of selling interest over to these levels of structure, over this price level. Okay, I'm gonna get another confluence of Fibonacci extension from the swing low back to the swing high, and I'm gonna get a 127 extension and a 1414 extension lining up exactly to those levels of structure. So let me put my line over right here. Okay, and what else do we have? Let me see if I get a Fibonacci inversion. Nope, we don't get we don't get that. Well, and I think we are going to get a 618 retracement. If I could scratch my chart up, zoom it in a little bit. If I could take my Fibonacci retracement from this swing high back where we have back to our swing low right here. Okay, right here. Okay, and if I could put back my 618 retracement, take that out, I'm gonna have a 618 retracement from that larger swing over right here. So this is enough for me to build a case for entry. Okay, so what I would look for what's left for me is for my setup to be met, for my entry technique to be met, which is on the 1 hour time frame. So if I could get a, okay, zoom it in a little bit. So if price could eventually extend to those levels of structure, I'm gonna have to look for a double top. Okay, lower low, lower close. Then I would enter short in anticipation of a retest at least back to these levels of structure, which is at 7600s. So how would my position look like? Well, if let's hypothetically say I'm gonna enter to those levels of structure, if I could take my Fibonacci retracement from this swing low right here, then take it over right there, you would see my 32 retracement will line up with that structure level, which is somewhere right here. So my 32 is right here. If my 32 is right between my structure levels, I would default to structure, because structure is the main core of my trading. So structure is very important in my trading. So my targets, my first target would go over to these levels of structure, which is at our psychological level, which would yield a 59 pip reward on this case. And if I could go 10 pips higher right here, would have to risk 31 pips worth of risk on this one. With this isn't the exact same risk that I would have to risk. I might risk more or risk less depending on my ATR at that time. So if price does come to those levels of structure, giving me a double top, lower low, lower close, I would enter short in anticipation of a retest of these highs, of these resistant levels right here, and an extension will go back to these lows right here, which is at our major structure level, and this would yield a 124 pip reward for a 31 pip risk if price does pan out as I think it would. So what's left for me is patience. Okay, patience, guys. So we have to wait, sit back. Now that I know what to look for in the market, I know my game plan, I know what to do, and I won't succumb to many psychological errors that may try to throw me off during my trading. So I hope you like this video, guys, and if you did, hit that subscribe button below, share with as many people as you can, and give it a thumbs up. For me, Mandla, I'll see you on the next episode of Market Preparation. See you there.